Good morning, good afternoon, good evening from wherever you're watching me from. Welcome, everybody. Welcome back to my channel. It's been a while since I posted finding Forex Setups episodes. I just remembered that it's been a while. It's been almost like 3 weeks I've not posted finding Forex Setup episode. So today being Monday, I decided to record the trades I took today to show you the screenshot I took so that you also be able to have a feel or you have the idea of how I trade as a professional trader. Okay, how we professional traders that we trade from home, how we trade, so that you also know the setups. You look at the setups, you put in your mind, so that anytime you're trading, you also use the same setups and you trade and make some profits out of the market. Okay, so open your eyes. Okay, open your eyes and watch every steps. Okay, every step I'm going to take, or all the setups. Open your eyes and watch all the setups, so that when you also one day open your chart and you're trading, you're able to spot these setups and then trade and make some profit out of the market. Today we're going to do how to find Forex Setup episode 11. This episode is going to actually run up to 200, up to 500. You are the guys I've begun with. So this episode 11. One day when you come back into the episode 200 or episode 500, no one can tell what will happen in the future, right? Good. But this episode 11. So without wasting my time, let's go to the charts and let me show you the trades I took today, the screenshots, and then you also keep the setup in your mind. And next time when you're also trading, you do the same. So on the currency parameter today, as you can see, on the H4, we always start analyzing our trade from the H4 because we are day traders, which means all our trades begin from the H4. That's our current time frame. So on the H4, we can see that which currency is strong and which currency is weak. You can see the card is strong. Can you see? The card is very strong. And which one is weak? You can see that the yen, the Japanese yen, is very weak. Have you seen? The Japanese yen is weak. So what can we merge? We can merge card yen. So you can say card, the Canadian dollar, card, and Japanese yen. What else can we merge? You can also see that the USD is strong. Can you see the USD is strong? And the yen is weak. So we can still merge USD with the yen again. USD with the JPY. Can you see? Very simple. Now, what else can we merge here? We can still merge. You can see that the NZD is also weak. Can you see? NZD is weak. NZD is very weak. So we can still merge the same two guys, the same two strong guys with the weak guy. So we can say, when you come here, we can say that card with the NZD. Card and NZD. You can also merge USD and NZD again. So you can say USD But the question is, why are we merging this? It's because we are merging the strongest to the weakest. Why? Because we want to find what? A trending market. If you want to find a trending market, if you want to see that the market is trending, you merge the strongest with the weakest, and definitely you find a trending market. If you want to find a raging market, you merge both weaks or both strong markets. But today, I'm in the mood to trade only trending markets, which means that I'm going to merge only the weakest with the strongest so that I'll get a trending market. Okay, when you merge the weak, the strong with the weak, you definitely get a trending market. So you see that when you open this chart, all this chart will be trending because we've merged the weaker guy with the stronger guy. The thing you shouldn't do is to trade those in the middle. Those in the middle, never try to trade them because they are neither strong or they are neither weak. Which means that when you open their charts will be either trending or ranging at the same time. You can't tell which mode they are in. Okay, so don't trade those ones in the middle. That's why always I don't trade those guys in the middle. Okay, merge the strongest with the weakest and find a trending market, or strongest or weakest. Okay, don't trade those in the middle. So let's open our chart and let's see. So when you open your chart, you have to open all these four charts. Okay, CAD, yen, USJPY, NZD, USD, USD, NZD. Okay, CAD, NZD, USD, NZD. You have to open all these four charts and you watch them. So let's see the first chart I opened and the trade I took. So the first chart we looked at was what? Was a CAD yen, right? The CAD with the yen. And as you can see, the market was on an uptrend, very strong uptrend. So where do I have to enter? When I opened my chart, I realized that the market was around this area. But I couldn't take this trade because I missed the trade. At that particular moment, I was taking a nap. I was tired. I traded the ACS session, so I was tired. I was taking a nap. So I missed the trade here. So I couldn't take any trade here. But assuming I took a trade here, where would have been the setup? Yes, where would the setup been? Where would the setup been, guys? What are you looking for? This is a trending market, right? So you can see bounce, bounce, bounce. Have you seen? And there's another bounce. So we must look for the setup here, this area, okay? Here in this area, before you think of what? You think of taking the trade. If you don't find any pattern here, you don't take a trade. So we are taking the bounce setup, right? Can you see bounce, 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 another bounce, and another bounce, all on the 100. Can you see? So which means that the moving average is helping us to find the setup. So we are trading the bounce setup on the moving average. And where should have been an entry? The entry would have been here. Let me zoom it in. Let me zoom it in. So you can see that there was a pattern here. See, there was a morning star pattern here. So assuming I was alive as at that time, I would have taken the trade here. Okay, my entry, my stop loss will be somewhere here. Let me clean this, guys. Watch, pay attention. My stop loss will be somewhere here. My take profit will be 1/2, and I'll be out of the market. If I'm risking 200, I always have to make what? 400. Very simple. But because I was not alive, I couldn't take this trade. So on the Cardian, I do not take any trade on the Cardian because I missed the opportunity. Okay, I missed the opportunity. I wasn't around. And this, you can see this is M15. So we look for the trade on the H4. Then we come to the M15 or H1 to find the setup. So on Cardian, I did not find any trade. But assuming I was alive to trade, I would have entered here because here is where I can find the bullish morning star. Can you see? Bullish morning star pattern. And then I'll enter here, my stop loss there, my take profit to 1/2, and I'm out of the market. So on Cardian, I did not find any trade. Let's see the next chart that I took. The next trade I took that I found the setup was USD JPY. And as you can see, we're on the H1 time frame. On our chart, we chose USD JPY, right? Remember, the USD was strong, the JPY was weak. So on the H1, as you can see, we're on the H1, but I did not take the trade on the H1. You can see the market was trending beautifully, right? Market was trending beautifully. But you can also see that at this zone, you can see a support zone here. Can you see? Support zone here. So what I did was that you have to wait for the market to pull back and come back to the support zone and give you a confirmation pattern. Okay, but because of this particular pattern, I decided to drill down to the M15 to see what's happening on the M15, because that would be a better way for me to take the entry. So I drill down to the M15 to take the trade. If the H1 is trending, M15 is also likely to trend. So the market pulled back to the zone, and then I got a bullish engulfing pattern. So I entered here. Can you see my log? I entered here. My stop loss behind the pattern. My take profit 1/2, and I was out of the market. Can you see? The moment I took the market was reversing. But this is when, guys, you guys have to be very patient. See, at this particular moment, my stop loss was here at this zone. Can you see the point here? The log, good. But the market did not log me out there. See, the market reached almost at my stop loss, and it reversed again. If you're an amateur, you're a beginner trader, you begin to shake, right? Because you think the market is going to come down, hit you out, become a losing trade, right? But because I know what I'm doing, I don't shake because I'm a professional trader. So I don't shake. The market came down a little and now reversed back, and then it hit my profit target, and I was out of the market. Always don't shake. When you enter a trade, let it rather hit your stop loss or your profit target, okay? Do not rush. Do not rush to get out of the trade, okay? Don't rush, because the moment the market is about to hit your stop loss and then it goes to a point where it did not take you out, then you begin to shake. You think it's going to be a losing trade, right? But if you are patient enough, it might lose or it might win, but definitely, always, most of the time, it's going to win. So please pay attention, okay? When you're trading, don't be shaking, don't be shaking, don't be shaking. Don't say, hey, at this moment, if I don't take my profit here, some people will also take their profit here. Some people just enter and take their profit here, just here, because they were afraid that the market is coming back to hit them out. But don't do that. If you stay in the market, always stay in the market. Don't take your profit target, okay? Don't close your trade until your profit target gets hit or your stop loss gets hit. So it's either your stop loss gets hit or your profit target gets hit. That's all. Don't be rushing to get out of the trade, okay? So this is on the USD JPY. I found the setup. So can you see? Let me spin the setup again. Can you see the market was trending? You can see a breakout. Can you see? Breakout around the zone. So the market pulled back again and came to retest. And then I took the trade here. Very simple, very nice pattern. Risk reward of what? 1:2. Always, if you're risking 1, you're making 2. So let's say that you entered here, stop loss behind the pattern. If you are risking 100, you always make what? You always make 200, guys. You always make 200. If you are risking 500, you always make what? You always make 1,000. Okay? Don't be shaking. Always wait for your 1,000 to reach before you think of exiting the market. Okay? If you are a small guy, you are risking 50, then you must always take what? You must always take 100, right? Just take 100. Don't be shaking. Okay? Risk reward 1:2 every time. Okay? So this is the card. This is the USD yen trade. Let's see the other chart that I took today. The next chart I took today was also the NZD card. As you can see, the NZD card was in our list, right? And you can see it was on the H1. And as you can see, there is a support zone here. Can you see? There's a support zone here. Support. Watch out, guys. Watch out. There's a support zone here. Can you see? So I read that the market was trending. The market was already trending, which means that within last week, the market was trending. But just from yesterday, and within, I think from Thursday, Friday, this is Thursday, here is Friday, and then weekend, right? And weekend is Sunday, and now Monday. So, but the market reversed. So you can see the market is trending beautifully, right? Trending beautifully. So how do you know the market is trending beautifully? Get pullback, reverse, pullback, reverse, pullback. Can you see? So higher, lower high, lower high. Can you see? Which means the market is going down. Are you watching? So the market pulled back to the zone and realized that there is a trend line support at the same time, horizontal support. So I was waiting for the market. When the market opened, when I woke up, I was waiting for the market to give me confirmation pattern. So when the market gave me confirmation pattern, can you see? Can you see the confirmation pattern? But it was too long. I cannot take my trade here. It was too large. Because of that, I have to wait a little for a discount. So I waited a while. I waited a while for the market to pull back to this zone before I entered. So that my stop loss can go a little far. My take profit was 1:2, and I was out of the market. Can you see? So the market was trending beautifully already. The market was trending already. And then I spotted this pattern. You can see that the market was making zigzag pattern, right? Going down. You know that, right? The downtrend is beginning. So it also confirmed that we had another support zone at this area. Can you see? Support. The market was supporting at that area. There were a lot of reactions at that area, which means it's likely the market will hit and reverse. Very, very simple. If you know what you're looking for, okay? If you know what you're looking for on the chart, it's very easy to trade. But if you have no idea of what you're looking for, then when you open a blank chart like this, when you open a blank chart, you don't know what you're searching for because you don't have anything in your mind. That's why you must study before you think of trading the market. At least if you know what you're looking for, then you know that, okay, there is a support zone here. So you draw your support lines across, right? Very simple. Draw support lines across because you can see there is a support zone here, which means you must have something in your mind you are looking for before you think of opening the chart. Then now what do you wait for? You look for a nice part to see that, okay, the market is actually reversing. The market is because the low is taking. Can you see? The low is taking. Because of that, wait for the market to pull back and then you get a confirmation pattern and you enter the market. If it's too short, you can enter immediately. But if it's too long, wait a while for a discount and then your stop loss will be at a good place. Your profit target 1:2 and you're out of the market. Very simple. The market was trending already, but the currency reversed from this zone. Can you see? From this zone, the currency reversed, which means we were now heading towards to a downwards move, right? We are now heading towards to a downtrend. So that's how it is. Every day when you're trading, you must have something in your mind before you think of trading, okay? So this is another second trade I took. The last trade I took was the USD, NZD USD, which means so far I've taken 2 trades. This is the last one, making 3, right? So when I open my chart, I can either get 1 trade or 2 trades or 3 trades, okay? That's all the trade I look for. If it's more than 3, I don't take it. And because I trade all the currency pairs, it's likely for me to get trades every day, okay? Because I trade all the currency pairs using the currency trade meter. Because of that, it's likely for me to get trades every day. I don't trade only 1 currency pair or 2 currency pairs. I trade any currency pair which is ready for my setup, okay? So on this chart, as you can see, on this chart, on the USD, NZD, you can see that the market was also on a downtrend. Can you see? Was also on a downtrend. And you can see the market made what? Power move, reverse, power move, reverse, power move, reverse. Can you see? So the market is on a downtrend. You can also see a lower low. Can you see? The market is making lows, which means the market was trending what? Downwards. So why are you supposed to buy? Are you supposed to buy here? You don't buy here. You don't buy here, guys. You don't do that. You only buy at the upper part, okay? When you're drawing trend lines, draw trend lines at the upper side, not the base, not the lower side. Always trend lines should be at where the market is sliding. Okay, so where did I enter? Can you see where did I enter? Can you see my log is here? Can you see? You can see it clearly. My log is here, my take profit was here. So here is my entry, my stop loss behind the pattern, take profit 182. Have you seen? Take profit 182. This was actually a little more than 182 because of this structure. I saw a structure here. Watch, guys. I saw a structure here, so I knew that the market is likely to come to the zone. I knew the market is likely to come to that zone. Because of that, I took my profit at a particular zone. So it was a little more than 1 to 2, but we don't take less than 1 to 2, okay? You can take 1 to 2.5, 1 to 2.2 if you know what you're doing. So can you see the structure? Power move, retreat, power move, retreat, power move, retreat. So I joined the trend on the retracement. Can you see? And I rode the trend downwards. That's how you trade every day, guys. Trade like that every day and you're going to get a lot of winning trade, okay? But if you don't know what you're searching for in the chart, then when you open your chart, you don't know what you're trading. You get confused. You don't know where to enter, you don't know where to exit. But as a professional trader, I have everything planned in my mind already. I know where I'm supposed to exit, I know where I'm supposed to enter, I know where I'm not supposed to enter. Okay, if you do that, then it's likely you're going to have a winning business because you know what you're doing. But what if you have no idea what you're doing? Then you're going to have a lot of losing trade, okay? Don't do that. Don't do that at all, okay? Don't do that at all. Always make sure that you know what you're doing. No market structure, okay? No market structure. See, at this zone, you can see the market was also making what? Structure here. Can you see? Support zones here. Can you see? Support zones at this area, which means as the market come back to this zone and give another part within the same day, it's likely that the market is going to reverse here. Can you see? You must know all these things. This structure. Can you see structure? Structure. Can you see? So the market is likely to come back here and bounce back, or come back here and break. So when it breaks, then you must think different. When it's bounced back to, you must think different. This is how we trade as professional traders. You must know what is happening in the market. So my guys, as you saw on the charts, every day when you are trading, you must analyze the market the same way. Check your currency trend meter first, then you check your setups, and then you find your entries. You find good entries. Mondays are actually my best days of trading. People say Mondays are not good to trade, but Mondays are my best days of trading. Okay, I don't know why, but I just love to trade Mondays. When I trade Mondays, I am happy. I got a lot of winning trades on Monday. So you see, today I got 3 winning trades. It's not always going to be 3 winning trades. Sometimes I can get 2 winning trades, 1 losses. Sometimes I can get 2 losses, 1 win. Remember, around last week I got all 3 losses. Okay, around last week era I got all 3 losses, but it doesn't matter. All what matters is that you know that at the end of the month you're becoming profitable. When you put everything together, net, at least half of your trade should be profitable. I always say this, and half of your trade should be what? Losses. You're definitely going to be profitable with risk reward of what? 1 to 2. So that's how we trade as professional traders. So keep these patterns in your mind. Anytime you're trading, use them to trade and become profitable. This is Towards your mentor. See you next time.